Good morning, good afternoon, good evening, everyone. Welcome to the Changing Face of Mining. Um, I'm excited for this particular program. It was born out of an idea that I had, whereas I used to do a lot of market intelligence briefings, and I kind of missed it. So I thought, why not have a group of really amazing women come on the show and talk about that? I'm also listening to a lot of different mining podcasts, and I thought that there might be a different perspective to be had. And so I invited these three lovely women who are my friends and colleagues to join me. Before we start, I am Peggy Bell. I am the Chief Growth Officer of the Femina Collective. I am also principal of Peggy Bell Design, both of which organizations support women in mining and growth in various capacities. I am calling in today from the Mississauga Anishinaabe territory, which is currently known as Peterborough, Ontario. And for my reconciliation moment, my land acknowledgement, I was I always tried to make it a little bit different, but I wanted to say I got some beautiful jewelry at PDAC. One from a dear friend of mine, Carrie Lintowitz, who runs Diamonds in the Rough, which is an all-women safety team, competitive safety team. And something about buying Indigenous art is that it is important to buy it from the source and not from Amazon or even Etsy. I would say right now is a little bit challenging to buy from. You certainly need to do your due diligence on that. And so, remembering to provide economic support to people for art is incredibly important, and to buy it from ethical reasons and from sources that we know. Before we start, I am going to do a little disclaimer, which is a bit different for me. The insights and perspectives shared today in this webinar are reflective of our knowledge in this group and the three women that are with me on the call. The opinions do not necessarily represent those of any specific information, but they are owned by ourselves. The information presented is based on our current understanding as of today's date, which is April 1st. This is not a joking webinar. This is very serious. It just happened to work in everybody's schedules and is subject to change as the market conditions evolve. Additionally, this webinar is for informational purposes only and should not be considered financial or investment advice. We encourage you to conduct your own research, consult with a qualified professional before making any investment or business decisions based on what you hear today. And so with that, I would love to kick it off with just around the clock, like the clockwise way, and that would be Ranjini. Why don't you start by introducing yourself?
Okay. Hi, everyone. I'm Ranjini. Thank you so much for having me today. I have a background in finance, investor relations, and sustainability reporting within the mining industry. I started here and started getting more and more driven to do more purposeful work within the industry. And I am ambitious enough to think that mining will have a very positive, long lasting impacts in the communities that we operate. Just a little bit background on me. I love mountains. I'm there either with skis or rock climbing in the summer. And yeah, so I'm happy to be here today. Thank you, Peggy.
And I do believe that Ranjini has never met a sport she doesn't like, by the sounds of it. she generally takes them all on, except for I'm trying to get
Okay,
her into golf, and she's
golf. Yeah. Okay.
resistant.
I'm on the fence on that. Yeah.
but I will not give up. Karine, how about you?
Good morning, everybody. Thanks for having me, Peggy. This is just a great opportunity. I don't know that there's been a lot of female panels like this, so hopefully this is the first of many. By way of introduction, Karine Smith. I work for Newmont. I'm based here in Denver, but originally from Vancouver. I'm an accountant by background, so I worked at PwC for many years in the mining space, and then sort of saw the light and transitioned more into the commercial side of things. Much like Ranjini, I really just see that there's a lot of positive education and uplift that we can bring into this industry that's really been clouded by a lot of stigmas and misnomers in the past. And so really being part of this and being part of other aspects of the industry to really shine a positive light and get people inspired to be part of this industry is a huge focus for me. Yeah, and I love the outdoors. I'm currently in the mountains right now, and if I'm not in the mountains, I want to be at the beach. So like Ranjini, I've got too many hobbies to name, not enough time.
I love that. Ruby, last but certainly not least.
Hi, everyone. My name is Ruby Barrickman. I am founder and CEO of a company called Magis Development, which provides energy strategy and advising for the mining industry. I have a mining engineering and project finance background, and have been an entrepreneur for about 2 years now. So I like to keep my ear to the ground on what's happening industry-wide. Even though I've transitioned a bit onto the energy side, I still have clients in the mining space. And I am just excited to be here and hear what everybody has to say about what's been going on and hopefully what's happening in the future, though I can pretty much guarantee we're going to be wrong. It's just how wrong we're going to be.
Oh my gosh, I love that. I have so much in your introduction that I could, because I also have done work in environmental and energy, and I do believe that in the coming years, environmental is intrinsic to both, but that energy and mining are going to become closer and closer buddies as the years go on. There's just no way that we can really continue to segregate ourselves. I assume it's almost being the same industry at this point.
They're going to converge, I think.
Yeah. And I, of course, when we were doing our pre-call, I did say back when, so I've been doing informational projects such as these for about 10 years. And after COVID started, I would put out one briefing, and then the next day I'd be like, okay, so you actually need to scrap everything I said yesterday. We're going to start from scratch, and this is what's going to happen maybe potentially today, but that could change again.
What do we say? Uncertainty is the new certainty, right?
Well, that's it. I think that's one of the things that's where we can really start, is that we've been operating in times of uncertainty now for, I would say, almost 8 years, that it's kind of become the norm at this point. So on that, it's certainly been a interesting 3 months at least. Interesting first quarter. Karine, I'll start with you. What are your initial perceptions of the first quarter and how it's going to set us up maybe for the next one?
Yeah, it's a loaded question. I mean, I think we've seen a lot happen in a very, very short period of time. The rebalance of who are allies and globally cooperating with each other, or who will not cooperate with each other. You've seen gold spike to all new levels, so just over 3,100. You're seeing copper, a huge disconnect between what's happening in the COMEX and the LME, and there's a huge flood of gold and copper into the US before the next round, or anticipation of more tariffs coming in on those metals. And so that's creating a disconnect in the market, and obviously opportunistic for certain traders and certain producers to be able to take advantage of those changes. I think it's going to continue to just put cost pressures and uncertainty. So I think the world is going to get more expensive, and you're also going to see people be more deliberate about their intentions of who they sell to, who they don't sell to, who they buy from, where the flow of goods will go and will not go, and that, it's going to take the next, I think, 6 to 12 months. You'll see things sort of really, the data will come to life as to where things will shift. But I think we're in a very fluid landscape. From an M&A perspective, that's also going to change how people are willing to make strategic decisions as well.
Yeah, I'll just pick up on one piece there, is that, so gold is now, I do believe, fully over 3,000 an ounce. I haven't checked the prices today, but to that point,
31.57.
What's that?
31.57.
Oh man, I remember BNA called it maybe 4 years ago. I said, BNA says that in the next 5 years we're going to hit 3,000 an ounce, and my leadership team was like, they're crazy. What are they talking about? Well, there you go, BNA. Maybe took a little bit, but here we are. And then so I think that you said life is going to get more expensive, and that's really not just for companies mining, etc., but life, our life society's life, people, it's a whole other game that we're going to see as far as inflation and all that other piece is going to get more expensive. Ranjini, what about you? What are you thinking about the last 3 months? And
Yeah, again, like Corinne, it's a loaded question. Um, like gold, I think like we have been seeing a lot of stalling and downward pressure on commodity prices outside of gold. It's just inverse right now because everybody is like waiting and watching. There is a stalling of the automobile industry and the heavy industries, which depend heavily on raw materials, critical minerals for their transition as well. So all the net zero transition plans, decarbonization plans, they're sort of on pause almost, it seems, just like they're all feeling it out. So there is a downward pressure there. And again, the gold prices are rising. There's inflationary environment right now. And there was a 4% dip in dollar in 2025.
Mhm.
And I think like it's a real opportunity for us as a mining industry to think about how we are going to position ourselves, define ourselves, like what our goals are, and are we going to continue to pursue towards decarbonization. And yeah, well, it's just waiting and watching right now, and it could be frustrating with all the work that we are doing around sustainability and the future of mining to position ourselves in a better spot, in better light. Yeah, so we'll see what comes next.
yeah, hard to predict. Ruby, how about you?
It's interesting. I got some data from my friends at RBC and National Bank, and I mean, it looks like Q1 2024 compared to Q1 2025, M&A activity is essentially flat. I think it was 5.2 billion in the space in Q1 last year and 5.1 this year. So, I mean, all signs point to it being somewhat stable. However, when you think about it in the context of gold's 45% higher, copper's 30% higher than it was Q1 last year, and adjust for those prices, it's lower, and there's less activity. I think with these the increase in costs for all these producers, they're not capturing the increase in gold price and the increase in copper price as much as you should. So I'm curious if investors are moving into investing in the physical commodity as opposed to mining companies, and if that's a trend we'll continue to see, as it's more when you're not exposed to OpEx, especially in a high tariff landscape. Maybe it makes more sense to invest in the physical commodities, but I don't know, Corinne might have
Yeah, I mean, I think you're seeing this especially in the junior space, right? So the juniors are just having a hard time getting funding and financing for exploration and really not being rewarded. And I think if you look at the long-term horizon, and everyone is very bullish on copper, and we need it for the EV transition and the betterment of society and various other initiatives, you're really not seeing the junior space getting the reward and recognition. And I think the same goes for even in the gold space right now, with gold over 3,100. You would think that many companies are, their valuations would be a lot higher than they actually are. But I think you also have to take into account that as gold price goes up, costs of imports, consumables and other aspects of and attributes of mining also go up. And so I think the ones that are probably more rewarded than not are the ETFs, and to your point, the physical metal components of the industry. And so that also thwarts, future optimism and investments to point towards the mining industry.
Yeah, we certainly saw that last year. I think is that gold prices were still quite high last year, and at the point that time I was working for a lab, and when you're an assay lab, you are generally a leading indicator on how the gold market is going to be doing for the next year. And it was so quiet, very, very quiet, especially in Ontario. BC was the copper gold market in BC was going really, really quick at that point. But we just weren't seeing that move of the funds with the high gold prices into the projects themselves, and certainly not into the juniors to the same degree. It was very much a project development story, as far as we are in project development. We are going to move this into hopefully production. It was not so much on the juniors that maybe play the stock market a bit more. We just didn't see that.
Yeah, and it's hard. I mean, long-term consensus pricing for copper is about $4.25 US per pound, and long-term pricing for gold is about $2,200 US. And it's hard also to do deals in a hot market. It's like buying real estate at a high. It's hard to underwrite. The sellers want a lot of credit for capturing some of the high gold prices, but when you're looking at it in a long term, what price are you underwriting to? So it's
Are you doing M&A at the peak of the market, right?
Right.
So nobody.
Some
I think
we've
last
seen
year,
bad
2 years ago,
decisions be
people
made.
thought it was the peak, and now this is like the new normal. And like, where do you go from here?
Yeah.
Exactly.
Where do you? Yeah. But I just want to circle back around to those macro influences on trade. So we're seeing an executive order coming from the US as far as domestic production. Canada has a similar story around removing federal oversight for major projects and having that one project, one approval piece in theory, reducing the time of permitting and to market. So there's that piece. And so there's how do you put this? The very concerted effort of domestic production, but then we also have other things at play as far as ESG increasing from the Europe, potentially decreasing in the US. Corinne Free, what does that mean as far as these trade flows? Like, how are we going to see these maybe diverging viewpoints? And how is that going to impact where people basically buy their product from?
Maybe just to go back to these accelerated sort of permitting and approvals.
Yes.
I think it's well and good that these governments, Canada, the US, and I think you'll see others that follow, wanting to expedite these mines coming online. But I think and Ranjini can probably speak a little bit more to the community impact and how many, do communities want these projects to come online at these expedited paces. Right now it takes an average 29 years for a mine in the US to go from exploration to production. But I think the question that I still have is, who's going to fund this? As much as you say you're going to expedite bringing it online, do you actually have the manpower and capacity to bring these mines online? So we still keep talking about worker shortages and skill shortages. And then even if you bring these mines online in these jurisdictions, the likelihood is that the material will have to get exported for refining and smelting.
Yep.
And so as much as you talk about bringing these projects online, there's still a bottleneck in terms of where the material has to flow from a trade perspective. And unless there's a meaningful investment to bring smelters, refining, and actually domestic processing capacity in country, which is very hard, and from a cost perspective, smelting is not necessarily seen as the industry with a lot of profit opportunities. That brings a different question into my light.
Well, yeah, absolutely. That's a good question, right? So federal oversight in Canada had the Impact Assessment Act, which I assume at this point has gone someplace. I don't know. When you remove federal oversight, does that legislation cease to exist? And there's certainly some pieces around there. To your point around talent, and ensuring the other executive order of the U.S. was certainly the decreasing of diversity, equity, and inclusion and so how do to what point is the onus on the organization or the provinces or the states to ensure that inclusion environment or that equity, so that we are continuing to attract talent and that communities do continue to support our projects. I don't know, Randy, to Corinne's point, that's something that's the area where you play. So why don't you tell us?
I would want to start first by saying that our supply chain is widening. So from door to cradle, cradle to final product, it is going to get wider and wider because of how our trade relationships are evolving and changing. So to that end, I think the onus would shift heavily to our industry. And it is a real opportunity for us, I think, to redefine our industry, to build better relationships with the communities that we operate in, with human capital and talent pipeline, and encouraging, I think, new talent coming in and the new pipeline that we are building, that we can do better to build a better constructive industry, which is going to ultimately have more sustainable supply chain products, which are coming. Like Europe is still, since COVID, they have still stuck to their plan of implementing and bringing a lot of acts into place, which would actually make supply chains more sustainable. Like the Critical Minerals and Metals Act came online last year, which puts responsible sourcing. It both incentivizes and also financially de-incentivizes companies to partner with Europe to source to export raw materials, but it also puts a certain degree of governance and responsibility on the mining industry to rebuild the relationships. The consultation processes could get even stronger with the communities when we just don't talk about the operational impact, but the legacy the industry and the operation can leave behind by taking into consideration all the other macro factors that are going to play out. So I think that's an important piece that we should all be looking at as an industry.
So my question then comes from both a sourcing and an M&A perspective, is that if the onus is on operators, or if the operators put it into their plans to create a more sustainable operation, what does that mean from a sourcing perspective, in whether that's from countries? So how do you choose the source where it comes from? Like, how do you choose Canada over the US, global north over global south? And also, how does that play into the M&A activities? Where are you now looking at operator, like, are you now weighing more heavily sustainability risks, social risks in an M&A perspective, and then making decisions from a that piece of risk mitigation? Who wants to take that one on first? I'm looking at Ruby or Karina.
Yeah. We, even in a world, let's say back in 2021, 2022, when there was seemingly a lot of investor interest on ESG, we never really did see a green premium, I'd call it, on metals. Yep. So I don't know how much of it was lip service, and now that it's unwinding a bit, I don't know. I find it hard to believe that in the near to mid future we would see that premium. What's interesting from a government incentive standpoint, especially down in the U.S. with the Inflation Reduction Act, we've seen a lot of that being unwinded. Yeah. What hasn't been touched in the U.S. is any of the what we call tribal dollars. Yep. For instance, the Department of Energy has $20 billion of debt financing for energy projects for tribally owned entities. And I think it's a really unique opportunity for mining companies to partner with their Indigenous communities, because from a strictly financial engineering standpoint, these groups actually have access to better financing than the mining companies do at the moment. So, I mean, I think it could be a net win for everybody to reframe and tap into those government incentives through Indigenous partnerships, and have this inclusive economy where everybody kind of wins. And so we haven't seen that piece touched yet for anything from the IRA. So I see that as a massive opportunity, and I mean that's what we do at Magis is look at different ownership structures for energy projects for mines. So, and that's a great one that I think is a net positive.
Yeah, and I think maybe just to add to what you said, Ruby, it's from an M&A perspective, I don't think companies are specifically looking at, like, ESG is a component of it, or a pillar, but it's not the end all of all, right? So most companies are looking at reserve replacement and strategic opportunities to, rather than just that pillar. And I think to your point, the license to operate is becoming more and more of a focal point, and the Indigenous and tribal relations is really, really important. And I think even it'll be interesting to see how things change over this current, I guess, presidency, and in terms of what they're going to do. We've seen the Pebble project, which has had many protests and delays and court hearings that basically blocked the project from moving forward, and now they're on a bit of a tear from a share price perspective, because there's this renewed optimism that they'll be able to fast track and get their operations flowing. And will that actually happen, or is that just optimism and speculation and potential profit taking right now? I don't know. So we're in a very interesting sort of turning point as to what will actually materialize, which companies are going to be on the M&A front. Even Resolution will be an interesting one coming, down the pipeline. And is this the next 4 years going to be really critical for them to be able to meaningfully advance that project forward?
I mean, we're nothing in the U.S. if not litigious, right? So it will be really interesting to see, and how much does this executive order?
Yeah.
I mean, yeah. How real is it, and how much will the courts play a massive impact? And if you can tie something up for the next 4 years or 8 years or whatever, I mean, I just wouldn't want it to have the opposite effect. And that's where I'm a little nervous, where there'll be a lot of resistance.
Mm-hmm. Well, I worry that if we are advancing things too quickly, that we haven't actually done the full environmental assessment and impacts, and making sure that we're not, I think there was talk about advancing deep sea mining in the U.S. again, and I think are we sort of getting trigger happy and trying to do too many things at once without really critically taking a step back and saying what is priority, what should be advanced, what makes sense from a I guess in-country sourcing perspective, and then also job creation. What can you actually move forward?
Well, and still there's that whole circularity conversation before we get into deep sea mining. What is the circularity of the industry? And even going so far as having come from an infrastructure engineering firm, how are we building our infrastructure with circularity in mind? And are we doing so in a way that makes sense? Or are we just building it, like when we put in a light rail system, are we thinking about, well, these cars, have maybe, I don't know, call it 40 years on them. The train cars have 40 years on them. How are we decommissioning them in a way that makes sense from an environmental perspective? Is that a question that is being considered? So yeah, there's a lot of different puzzle pieces before we approach the deep sea mining question. There's a lot of other things that we could be talking about. So, but we do make these commitments. We do make financial commitments to communities. And I know that Ranjini and I went down a rabbit hole like last week about financial commitments and what happens when in these times of challenging macro environments, or even, I shouldn't say challenging, because to the point around there is opportunity. In these times of uncertain macro environments, how do we stay true to those commitments that we make to communities, and how do we continue to fulfill them in a way that makes sense and that does create prosperity for all? So, Renji, I don't know if you have a...
So to go back to Ruby's comment before, like how mining companies actually would have more access to capital with more partnership and stronger relationship building with our indigenous, our tribal counterparts, and they are an important component, and I think the revenue sharing, we have to move beyond just revenue sharing. We have to look at their long-term sustenance beyond just our operations. And I think this is a good time even for them with everything that's going on. We have their attention to not just come to the table during consultation process saying that what can you do or how can we share the revenue just during the operational phases. Can we have this revenue sharing beyond the life of mine? I usually the closure process is feedback. I think we can also guide the feedback system in a bit where they think just beyond um, the financial or the community development support, but also how the legacy can continue beyond closure. So the closure conversations can start when we're in the consultation for FPIC. And then I'm going to go to the investor side a little bit.
Yeah.
EU investors are reading this accelerated permit in many scenarios as physical climate risk impact. I think they are taking out the transition climate risk, the regulatory side of climate risk, and putting that into physical climate risk factors. Because if we are overlooking certain environment pieces, how it would create inflated um, capex. It could feed into the capex, or it could impede a lot of production. And ultimately, would this it's a far stretch? Would this affect commodity prices? Could there be shortages because there are significant climate risk factors which is actually playing out? Is that something that we are waiting for right now to see how we would kind of integrate that into the M&A, into like consolidation models?
Is it a risk though that if is climate risk actually far-fetched? Because when you think about, and again, I am not a mining engineer, I will say that I'm just somebody who talks on the internet to really smart people. But like let's like look at the climate. Like we are seeing more and more disruptive climate occurrences, right? So is it really a climate risk that we do lose production of a copper mine for X amount of time because of a once in a century event is now becoming a once in a decade event?
Yeah.
And that is a risk to how we are going to move into that new net zero age. So there is more and more of that. And when we do, and so yeah, one point about executive orders and policy is that it is an indication of what the government wants to do around development. It is not like an executive order or a policy announcement comes out, and speaking from Canada too, and all of a sudden, like, life's we do have to take some time to understand what that means. Yeah, so like, is that something that is being considered when we come out with these? Is that how could climate be physically?
Well, it goes. Rangini has a good point. I mean, it goes to capex from a design perspective.
Yeah.
What are you designing for? Like, your water catchment systems or whatever it is. Are you designing for a 500-year storm or a 1,000-year storm? Especially if these are not necessarily 500-year, 1,000-year events. Mm-hmm. And I mean, it's a hockey stick of how expensive that gets. And when you start pulling on that thread from a permitting perspective as well, I mean, I don't see a world where there's no permitting in the US. So I do think we still have to be cognizant of how we're designing to those type of events mm-hmm. from a mining engineering standpoint.
Yeah.
And what is that permit going to require, right? So like how high is the bar or how low is the new bar if we're going to be expediting everything? What does good look like going forward?
Yeah. And I just looking at time, Emily Sportsman asked a great question in the comments, so I'm going to pull that up, and we can make this our last official question before I get into the usually fun things that I ask people. Is do we think as an industry we are at risk for are at risk with an increased push for project development for having another reputational setback if development speed is prioritized?
Look, I think I'll jump in. I'll jump in. I still do think that permitting, especially in the US and to some degree in Canada, is the bottleneck. So I think as long as project development doesn't become the bottleneck, we will see the same standard in engineering all the way through. I mean, it would be great if those could progress in lockstep, and we could keep the same standard of project development, because it seems to be in any of the projects in the US, it's a lot of hurry up and wait. There's a ton of engineering, and then we're just pausing and waiting for the permit. So if we could match those timelines better and not just be, there's plenty of engineering work to be done. So permitting does not have to start, or doesn't have to be an immediate, we have this idea and here's the permit. There needs to be proper engineering completed. But I mean, I just find it hard to believe that permitting would ever become less of a hurdle than the actual engineering.
I want to jump in on that too. I think this is somewhere we should look at it as an opportunity when it comes to engaging with communities. It's like, here's an opportunity for more revenue sharing, accelerated permitting. So please come to the table quicker and engage with us in a way, and we can redefine as a sector, we can redefine our relationships. And I think the accelerated permitting could be a really great opportunity for us to develop more projects, to create more employment, more socioeconomic benefits. So that's my perspective on the accelerated permitting.
Thanks, Virginia.
Yeah, I think to Ruby's point, as long as the engineering integrity stays in place, then the bottleneck is the permitting and sort of the bureaucracy of moving things along. So if we're trying to take away just the red tape, but still have, for lack of a better word, the rigor of the checks and balances in place, then we should not be in the same position. But I think it really is predicated on what does this now look like? What are the checks and balances that are in place? And was the permitting process just belabored because of bureaucracy, or was there genuine outcomes that help to make things more rigorous? But I think it's more bureaucracy than checks and balances that were there before.
Very good. So now my fun question, which is usually, what would the Ruby of today tell herself the Ruby of yesterday? So to put a little spin on that one, what did the Ruby of 4 years ago think, or Karine or Ranjini, where did you think the industry was going to be 4 years ago, and do you think we're there?
I've been impressed with how some of those buzzwords, critical minerals, have become more of a generalist topic. I think for the first time in my career so far, I'm seeing a wider range of interest in the mining industry. Now, if that translates into anything positive or beneficial remains to be seen, but I don't know if I was expecting it 4 years ago to just be in our everyday vernacular, as a society. So I think that's pretty cool. And we have an opportunity to change the narrative a bit. And I really hope we as an industry capitalize on that.
Very cool. Karine, what about you?
Yeah, I think I mean, I didn't have any expectation that gold would be where it is today. And you know, 4 years ago,
Bank of America.
we were sort of trying to come out of COVID and didn't expect the roller coaster that we have today. But I think to Ruby's point as well, the fact that mining is part of everyone's conversation these days. Like before, when I would talk to friends that don't work in the mining industry, they had a very negative connotation to it and didn't really know what I did or why I did it. And, you know, you talk to everyone, and if it's not growing, it's mined. And so why are we kind of hiding behind the fact that, you know, everything is extracted from the ground or in some form? And I think the fact that people are now understanding that more and becoming more, I guess, educated in terms of where things come from brings a lot of opportunity to Canada, the US, Europe, to really latch on and move this industry forward.
Very good. Jeannie, how about you? You were thinking maybe there's might be something to the ESG thing, right?
I think I like that ESG is being like called out. Like it is not just a cute little fund that could be created to just say that, oh, we did this, this, and this. This is a checkbox. You actually have to demonstrate it. Like there is substantial development, I think, where you can't no longer do a checkbox exercise. I think it's becoming increasingly monitored and scrutinized. I think like 4 years ago, it was just like chasing Bloomberg to capture our ratings. Like, okay, if we don't have this rating, we're going to be kicked out of an index. That was the thing, but it is no longer just that. I don't think rating agencies, it's not a black and white picture anymore. It's more quantitative as well as more qualitative. So I am very, very positive that it's going to like evolve. And yeah, it's not going to just be a buzzword. And like, yeah, investors are going to get called out on.
Yeah, I don't read as many investor conversations with management anymore as I used to, but I did enjoy sometimes every once in a while always near the back of the one. You had to scroll all the way through, but near the back there would be some questions about ESG. So I'm happy those are coming up a little bit further. I personally, I would love to see, I was hoping we would be further along in cross-sector conversation as far as what does it mean to have energy, like whether that's an offshore wind farm or a solar farm or however, and how are we capturing that for storage, and then what does the grid look like? Like we're still missing that conversation. And I'm sure hopefully it's happening someplace in the government or but I don't see that conversation happening as much in industry, where we really need to start thinking about if we are going to do this net zero transition. Neither Canada nor the US have grids that can handle that. So there's that piece, but also how are we looking at it from a holistic perspective that, you know, we, the mining industry provides the critical minerals to produce both the wind farm and the battery. And so how are we stepping into that conversation more and taking a lead in that conversation where we have two separate end users that need support from both of us, and how are we bridging those gaps to really push this green energy forward?
Peggy, I could just kiss you right now. I feel like that was such a shameless plug for Magis. I mean, the reality is 30% of our operating costs at mines is energy and fuel. So if we don't have stable sources of energy, stable pricing and energy, it can be a big game changer for mines. And to flip that on its head, I mean, if we can have stable energy, it's such an opportunity. And so that's what we're trying to do at Magis Development, is just to twin that mining and energy field and get the right people in the room to talk about these solutions, and let alone the fact that it's our minerals that are going back into these solar panels and wind turbines.
Yeah. Very good. Well, it was a pleasure. Thank you so much for joining me to talk on the internet. I hope all of you come back again. I know Ranjini has a couple times now guests, but Karina and Ruby, I'd love to have you back as well. So thank you so much. I hope you see some really great jokes on the internet today, and I look forward to talking to you all soon. Thanks
Thanks,
everyone.
everyone.
All right. Thanks,
you.
everyone.
Oh.
Bye.
Ladies.